Hello guys, welcome to another video of this channel. So in this video, we're actually going to take a look at how you can actually write a winning proposal to your funder, client, or something like that, right? Now, personally, I'm a business consultant. At least that's what I call myself. And as a consultant, it's part of my job actually to draft proposals for businesses, right? And I've written many proposals, countless proposals, and I've also evaluated other proposals as well, right? And I'll say evaluating proposals that have been written by some of my clients that needs those proposals to be rewritten. I've discovered a lot of things. I've seen a lot of things. I say bad, bad stuff, right? And some of the things that I've discovered is that some people they write proposal without goals, right? Really. And most of these they were written based on their own on the person's own perspective, right? And lacking some of the other things that an investor might need to ask or need addressed. So that's one of the things that I discovered. Some were drafts, they were not professional, right? And some are even the wording itself, some didn't even contain context, that important context. And like I couldn't believe that people actually were submitting those things to intended investors and things like that. So in this video, we're actually going to talk about what a proposal, a winning proposal, or a proposal that is actually professional and can actually get you that funding must look like, right? So the very first thing on what it should contain, of course, we have an executive summary, right? That's the first part. So now we are talking about the structure, basically, the structure of a proposal and what it should be and how it should be structured, actually. So the very first one will be the executive summary. Now, I actually call that the selling point, right? Or the part which the bosses and investors read a lot, right? So before your investor or the ones that the person that you need to read more about the proposal before they sit down and go through the entire long document, the very first part that they read is the executive summary, right? So as the name suggests, this is where the executive goal, right? It should be summarized. So this party should summarize everything about your business in the proposals. I think about the proposal basically, right? Is the summation of everything. Just put in a few sentences there. So within that, within a proposal, what you should include is your name, your business name, what your business does, and like why you're writing this proposal, right? How much money do you need? Like the amount of funding, and what are the problems that you want to solve, and what are the expected outcomes? Like, what do you expect your business to achieve, right? Because at the end of the day, you are talking with investors, right? They need their money back at some point in time. So you have to address all these things. So it has to be short. Mostly, I think a page will do. Right. Then we go on to the next section, which is the business description. So as the name just explains itself, right? You're going to describe what your business does, basically, who you are, what you do, right? What do you do? Your product and services, right? What are you offering? When did you start doing these things? Where are you located? Things like that. Right? Who are your market? Who are you selling your stuff to? Right? I would say a description, basically like a description for a person. So you're going to put much information, relevant information about your business there. So all these things need to be there. Then the next section of the proposal will be the problem opportunity. So here we're actually looking at the problems that you're trying to solve, that your business is trying to solve, right? What do people want done? The market need, right? What problems do your clients face, your customers face? and how are you going to solve those problems. So you put that part under the problem and opportunity, or problem basically. If you can just maybe try to separate these things, problem and a solution. But usually I do that when I'm writing pitch decks, right? Identifying the problem and the solution that the business provides, because I think this is the selling point, end of the day. Right there, that's where clients kind of get the weight of what your business does, that there is a real market here. The demand, for example, it is kind of strengthened by the solutions that your business offers, right? So on the next point will be the market analysis. So right here we're analyzing basically the demand, right? Your customers in general. Who are your customers? What do they look like? Customer segmentation, right? Are they women? Are they people that are middle class income earners? Are they rich folks? What do they want? So that's where you look at the market, the industry trends, right? What is actually happening within your space where your business is operating? Like, what is happening, right? If you're providing maybe phones, maybe you want to produce a new phone, you have to understand about the smartphone industry, right? What is trending? What model is selling better? Things like that. What is fashionable? What do young people value the most, or what do your target market values the most? So you will look at again at the competitor analysis, right? Who are your competitors? If you're in the smartphone, Apple, what are they doing? Huawei, what are they doing? What are they offering? Product features, things like that. Then we look at the market size, which is the most important of this thing. Now, when we're looking at the market size, we're looking at the level of demand. By that, we're looking at the number of people that are actually willing to pay the money for the products. So that's demand in generally. Demand is not just interest of people that like something, right? Because you have to remember that these things are true. I can be interested in buying a Lamborghini, for example. Let's just use maybe those expensive exotic stuff. I have an ambition, or maybe I would like to buy maybe a Lamborghini, a Porsche, and things like that, but I don't have the money. Right. So I do not count as part of the market demand. The market demand are those people that are interested and also they have the finance to back it up. They have the money to pick it up. So whenever you're evaluating the market size, those are the things that you need to take into context. That market demand is not people that are willing to buy something, but they should have the money. So that's why whenever I do the market analysis, I usually try to go at the expenditure, right? For example, if we're talking about the automotive, the cars, I usually try to go to the expenditure on cars, right? How many people bought cars during maybe this period, within a year, whatever, 2 years? How many? Now that is the level of demand. That is what you use as the level of demand. So I've seen a lot of people doing these kind of things, like determining the wrong market size by just people that are willing to that are expressing interest, right? But that's one of the things. But of course, like especially when you're trying to do the market demand, especially in places like in Africa, right? There's not always that data that is current, and so yeah, sometimes you might use interest is to measure market size, but end of the day, it's not that accurate, right? Because interest and demand, those are two different things. Now we have to put the business model, my very favorite part. Now, what is a business model actually? So when you're talking about a model, right? We're looking at the way in which a business makes money. But how do your business makes money? How do your business makes money? So, for example, in retail, right, the way your business makes money is that they buy stuff, right? Already produced stuff from manufacturers, wholesalers, things like that. Then they take their stuff, break it apart, right? Supermarkets, that's what they do. All the ShopRite, the Pick and Pay, that's what they do. They take that, they break it apart, and they put a markup on top of each things, right? For example, let's say I've got this kind of what do you call this? We call it Mayo. I just got it, right? Retailers, they buy this stuff in bulk, right? They buy this stuff in bulk, right? Let's say in a case, and then they take these things apart, put them in the fridge there, then they price them differently as one, not in a case anymore. So in a case, it's actually cheaper, but if you're buying it from the wholesaler or the manufacturer, but when you're buying it from a retailer, it's a little bit expensive, right? So they're taking the margins in that margin, the profit margin. That is what they're taking. So that is the business model, basically. You make your money. That margin is part of your business model. So in general, that's what we're talking about, right? I don't know if I can make another simple example. What can I make an example of, right? Like I'll say, what is the internet, for example, right? When you buy data, right? How does the internet companies make money, right? They give you bundles, right? All those bundles called the internet time, right? Then you have to pay for that time, and they take the money. That's the business model. So that's basically it, right? So you have to explain how your business makes money. This is the business model part right here, right? Are you providing subscriptions plans, things like that? So are you charging fees, things like that? So on the marketing strategy, so here you describe how customers will be reached, right? How are you going to reach your customers? Is it through word of mouth, right? Are you going to post banners? Are you going to put an ad on television, on radio, things like that? How are you going to get your products across to your clients? So that's what you need to put under this part, right? Social media marketing, ads, referral programs. That is something that I've, as a consultant, I've just walking around where I live, right? People think that referrals are free. Like if you refer somebody to go and buy something, you should do that for free. No. It's not for free, right? If you refer somebody, you're supposed to give them a commission, right? So some people don't kind of put this thing into that context. They all think, people just go tell other people, come. No, if I bring a client, you're going to give me a commission for doing that. Partnerships, yeah, part of marketing. Then we have an operation plan, right? So an operation plan is a plan that is basically detailing your operations, right? How are you going to run a business? Where your business is located, and what's in it, right? What are the processes? If you maybe you're farming, right? How do you take care of your chickens if you're doing poultry farming, right? Where do you buy the food and stuff? So the whole process of growing those chicken, that's an operation plan, right? You plan that out. If you're maybe producing bricks, the process of that, getting the raw materials, the sand, the cement, whatever the case might be, putting those things into a machine, producing them, and then selling them off, right? It's part of an operation. You outline, it's like the map of your business on what you'll be doing exactly within a business. So all that information needs to go under the operational plan, right? So you detail your daily operations here. Then we've got the financial plan, right? The money part. Now, I've seen people struggling with this part a lot. They don't even, some can't even explain this part. And I get it. When people see numbers, right? Like myself, I'm not a friend of numbers, but based on what I do, I had to force myself to know basic accounting, right? But now this part is actually very simple if you explain it simple the way it is supposed to be. Now the financial plan is basically the part about the money, right? How are you going to get money? How much are you going to be getting? For example, the revenue, that is what we'll be talking about. And what are you going to spend that money on? Like covering your costs and things like that. What to be left with that, the net profit. So in simple terms, I think I've just described an income statement. I'll say a little bit of cash flows there, right? If you have cash flows, where are you going to be getting this money from? What are you going to be spending it on? If you are to buy equipment, if you are to pay salaries, things like that, or buy, invest, and things like that, all this stuff should be included there, right? If you have equipment, what belongs to you and what have you bought? So all those things that you have within a business, they have to be expressed in financial kind of terms, right? So for the financial plan, you're talking about the startup cost, right? How much did it cost you to start a business? What did you buy with the money, right? I think in the startup cost, if you especially if you're a startup business, you need to include that, right? You're going to get this much money, you're going to spend it on this and this and this and this and this and that. You have to detail that, right? Then the monthly expenses, as I've said, like you have to record if you have to pay bills, rent, electricity, things like that. So you have to detail all those kind of things. And revenue projections, as I say, like when you start a business, right? If you're selling stuff, maybe a retailer, you have to record sales, right? Of course, accurate projections have to be done using past data, right? If you've got data, maybe sales data, that if you record something, you sell it, you take that data and you're able to notice the patterns. Then from there, you can make projections like, okay, fine. If 2 years ago I was making this much, then in the next 2 years, I'm going to be making this much. Then break-even analysis, then when we're talking about break-even analysis, we're talking about the time when your business, the revenue that you get from the business, right? The money that you make from sales and things like that equals the cost, right, of the business, your expenses, right? That's breaking even analysis. That's when the business neither makes a profit nor a loss. That is what they call. So you have to detail these things down there. Expected profits, net profit. Like after getting the money, after covering your cost, what are you left with? Net profit. So for this part, I don't want to kind of dwell in it, but I'm just going to skip it for now, right? And just summarize it in a smaller sense. Then the balance sheet, right? That's when we're talking about assets. What do you have in your business? Which things that belong to you, right? What are the fixed assets that you have there? Things that are buildings, right? Things, any current assets, the money that you have, the stock that you have that you haven't sold, how much of it that you have. The liabilities, long-term liabilities, if you've taken a loan for 5 years, right? How much of it here do you have? Short-term liabilities, things like that, the debts and stuff like that. So you put that stuff on the balance sheet. Then we have the funding requirements, which is the next point. If you are looking for investment or something like that, like I think I've explained that, especially on startups, like when you put down those costs in a startup, you have to indicate what the money will be used for. So on the funding requirements, you have to indicate the amount of money that you need, right? How the funds will be used, and also the timeline as well, right? Timeline, yes. Maybe in 2 months you're going to buy this, 3 months you're going to buy this, 4 months, a year, things like that. Put them correctly. So as I've said, like this part usually needs somebody with an accounting background, right? Then the expected return or benefits, right? The ROI, return on investment, right? That's what you have to indicate as well. Why do you have to indicate this? The ROI usually simply means it indicates to the investor that if they're there to give you money, they will get it back, right? And they also get back with some interest as well, some profits as well, right? So they usually use that part to try and to determine, basically, to give you money, right? Every business, when they lend you money, they need something in return. So ROI, you have to put it on the funding requirements, right? So going back on the next point, which is the risk assessment. Now, in terms of the risk assessment, we are basically indicating here the risks that you are likely to face when running a business, right? of course, as I think I highlighted this on another video, that when you're running a business, right, you are bound to face risks, whether it's external risks or internal risks, which of course you can use that or analyze that using the SWOT analysis concept. So what are some of the things that are external factors that might affect a business, right? Economic downturns, right? If you are living, if you're operating actually in an economy that is volatile, that anytime things can go south, that's a risk, right? Which means your business can make losses. So you have to note that risk down. Competition, you can't control this one, right? You can start a business today, maybe it's a business in town, but maybe after 2 years, 3 years, and there are other people that are actually doing the same business that you are doing. And maybe they might doing it better than you. Supply shortages, right? This is actually good if you are running maybe producing something like a production company, kind of, right? Certain raw materials can be in short supply. You might face cash flow challenges, as I said. Yeah? Cash flow challenges, especially if maybe in terms of the credit that the credit system that you have in place. Sometimes it's part of that, right? Where you give people stuff and they don't pay on time, then you might have problem getting money to order new stuff. So assess all these potential risks and put them there. This basically shows that you are not just selling the investor a dream. You have to show them that if they're to invest in this business, we are going to face these challenges, because definitely you're going to face them. So this actually shows you that you've done your homework. But rather than just selling investors a dream that you're going to make money, everything is rosy. No, business is not rosy. So I think that's all, guys. I think that's all, right? And after you're done, you can actually summarize most of the points that we've highlighted here, the opportunity, the benefits that the investors or partners they're going to get from funding your project or your business. And yeah, you can just close it like that. So in short, that's basically how you can write a winning proposal, indicating the good part, the bad part, and detailing everything about a business, detailing every step of the business. And another tip is that never submit a draft, right? Make sure that you write the proposal, a final proposal that indicate to the investor that you are very serious about the business. But at the end of the day, guys, this is a marketing tool also. Maybe I've not highlighted that. A proposal is also a marketing tool. That it basically highlights who you are as a person, right? It's more like a CV, a resume. So by just looking at your resume, they're able to determine what kind of a person are you. And I think I had a lecture where I was teaching about a business proposal, business plan, actually not a plan, but they're basically like almost similar. And I've highlighted these kind of things, right, that you need to make sure that you don't disrespect the person that you're going to, because at the end of the day they will think maybe this was someone that wanted to take chances, right? So guys, that's all about this video. And again, thank you so much for watching this video. Until then, see you in the next video.